and a big loser at that. And by the way, in the same book, he says that if you think that's negative thinking, you're right. Only negative thinking is going to save you the most amount of money. Positive thinking, unfortunately, only ends up making you lose more money. One of my favorite traders, Linda Raschke, again, also in the same book, Market Wizards. By the way, if you haven't read this book, I highly recommend you buy it and read it. And here's what she says in this book. The interviewer, Jack Schwager, he asks her, could you describe the mistakes you've made in your trading career that served as learning experiences? Now notice how she answers this question. My own particular weakness has always been being a bit premature on entering positions. I try to wait until things set up just right before I take a trade. It is better to have the wrong idea and good timing than the right idea and bad timing. So you see, guys, what great investors and traders have all learned is that before you jump into a market and enter a position, especially when prices are falling, you have to first make sure your timing is also correct. By the way, Linda Raschke also says this too. She says, I realize I'm only human and that I always make mistakes. I just try to make them less frequently, recognize them faster, and correct them immediately. So remember, guys, the best traders in the world, they realize they're human beings. They can make mistakes. And if they make a mistake, they must correct that immediately. And by the way, guys, let me just say this. I'm sure there are people watching this video right now who are probably thinking, oh, risk and timing? Who cares about that? I don't have time for risk management or timing. If timing and risk management is not important to you, then you are not an investor. You are a gambler. And there's a big difference between gambling and investing. Investors always know how much they're risking, and they never risk any more than that. And they also know when to get out when they're wrong. Gamblers do not care about risk, about timing, or anything. And as a result, they're the ones who end up losing a lot more money. And guys, remember this. It is not how much you make, it is how much you get to keep. So guys, looking at this chart of Litecoin and Bitcoin right now, what does it tell us? Well, it tells us, firstly, that something I mentioned before, that the fact that Litecoin has broken below this key support levels, the February, April, May lows. And I said, look, if we go below those levels, and if we don't see a quick turnaround, if we don't see a quick reversal back above resistance, which is about the 110 level, then we could see significantly lower levels. So I would highly encourage those people who are thinking about loading up on Litecoin right about here, first of all, consider timing your entry better. Remember, guys, you're right. You have the right idea. As Linda Raschke was saying, yes, you have the right idea. You're a contrarian. You want to do the opposite of the herd, the opposite of everybody else. However, as she says, you can have the perfectly good idea, but bad timing. And by the way, let me just bring this to your attention. Some years ago, you might remember this, back in 2013. I remember back then when gold dropped below its lows. This is gold in 2013, when it broke key support levels. It broke the support levels it formed a few years back, and you can see what happened afterwards. It made a dramatic drop, and it continued to drop much further. I remember this, guys, that right about that time when gold started dropping, okay, in April 2013, I saw a lot of comments from people who were saying, hey, I'm going to go load up the truck. I'm going to bring up the truck and start loading up on gold. Now, I understand that you want to be a contrarian, and I understand you're thinking by doing the opposite of everybody else, you're being a true investor. But remember, all good contrarians and all the best investors in the world, they all abide by the third element, which is timing. So guys, the three things we must not do when price is falling is 1, not to be afraid. Number 2, not buying, but waiting for the right time, getting your timing right before you start buying into a market. And 3, risk management. Because even if you decide to buy into a market, like right about there, you have to decide, you know what, at what point you're going to decide you made a mistake and get out of that market. So looking at this chart of Bitcoin right now, you can see it's...
So I definitely have a different style than this guy. I don't recommend trading. I love sharing his content. I highly recommend if you're trying to educate yourself and you want to learn more about technical analysis, I will not give you that. There's plenty of other people on YouTube that are way better, and I highly recommend Alessio Rastani. I think he's one of the best YouTubers out there. But let's just go over what he was talking about. So I do believe that you cannot time the market. So he is right. And what's interesting is we actually got a bump now. So it looks like we might have a recovery in the price. But anyways, no matter what, instead of playing this timing game and figuring out whether you're going in into a falling knife, I constantly preach dollar cost averaging. And if you're dollar cost averaging, what you're doing is you do still try to time the market, because when the prices are low, you're supposed to be buying more often. And when the prices go back or are higher than normal, you're supposed to not buy as much or only buy very small amounts. And that's exactly what I've been doing. So I'm not selling. I'm not trying to figure out, when to get in, when to get out. I just buy and I'm holding. And my mindset is I'm not touching this for at least a year, if not 2-3 years. But like I said, I want to keep accumulating as much crypto as I can to a reasonable amount. And like I said, what I recommend is money that you would blow on other things, money that you would spend that would be zero. So money that I'll just go through it, like marijuana, alcohol, any kind of vice you have. If you're spending 500 a month, I would rather put 250 on your vice and then put 250 in to dollar cost averaging and continuing to buy every month, especially when you have dips like this. Maybe this month you're going to do a little less marijuana and alcohol. You're going to instead spend $400 on crypto and only $100 on getting stoned and getting drunk. But that's my investment philosophy, dollar cost averaging. So you can't time the market. You try to pay attention to market trends. And when you think it's on a dip, and like I said, it could go lower, I'm going to continue to buy. And then obviously once the bull market goes back up, I kind of wait. But if it comes back down again, I'm going to buy again, especially, if I can force myself to get a little less high and drink a little less. Or the next most expensive thing is taking out women. So spending less money on women and investing more in crypto. Anyways, let me know what you guys think about this. I went a little bit longer than I normally do on my videos. And Alessio Rastani, please check out his YouTube channel. It's a great channel. And I will talk to you guys soon.